Hey guys, welcome back to the channel. Before I get started today, please definitely like and subscribe. I really appreciate the support. So let's get started with the markets today. We had a big rally on Wall Street. I guess everybody's excited about the new incoming president, Joe Biden. He officially got sworn in today. So yeah, markets were up. All indices were in the green. The big outperformer was the Nasdaq. Pretty much, the FANG stocks are back. Netflix was up at one point. Was up like 19%. It was something crazy. So yeah, I mean the FANG stocks were up bigly today. Bigly, but yeah. So the markets, again, record highs. It's not going to stop here. It's going to keep going higher. That's my opinion, of course. And let's take a look at what the bonds did today. The bonds were actually flat. It looked like everybody just took the day off. There was hardly much action in the bond market. So yeah, 10-year yield basically stayed where it left. Let's look at cryptocurrencies. So right now, the cryptocurrencies were under some pressure today. Ethereum off its all-time highs. Bitcoin still in this consolidation range between 34 and 36,000. But I expect a next leg up higher for Bitcoin, just because the markets are gonna get what they want. They're gonna get more easy money from Jerome Powell and Janet Yellen, and the Democrats in the House are gonna supply as much free money as possible. So, yeah, I expect cryptos to continue going up. Now, let's see. Oh yeah, so touched on today Biden's big inauguration. Basically, I'll just say this: like, what does a President Biden mean for your money? President Biden's actually going to be good overall for the markets, and the way I look at it is this way: you have Jerome Powell that basically has the printing press on overtime, and then you have the incoming Treasury Secretary Janet Yellen on the fiscal side. I mean, Janet Yellen, I don't know when her solution to anything isn't printing more money. So more money is going to be printed and pumped into these markets. I mean, if you remember under Janet Yellen, I mean, volatility in the markets got crushed. So I don't anticipate big bouts of volatility. I mean, of course, you're always going to get spikes here and there, but overall, with Powell and Yellen at the helm, yeah, that's going to be very good for risk assets. So if you're in stocks, Bitcoin, real estate, I mean, even the metals. I mean, the metals have been underperforming gold and Bitcoin, but overall, risk assets are going to go up. So until further notice, I will still be heavily invested. Yeah, I mean, in my opinion, if you ask me, are we in a asset bubble? Yeah, we're in a massive asset bubble. No valuations make sense. Ranging from real estate to stocks to whatever. None of the valuations make absolutely no damn sense. But if all this money printing is going to happen, well, that money has to go somewhere. So that money is going to end up in financial assets one way or the other, which is usually going to be the first stop. So if you're invested in the stock market, again, stay invested. Just like, again, watch out for your risk. Make sure you know what your overall risk is. If the market goes down 10, 15%, are you going to be panicking, ready to jump out a window, or are you prepared and fully aware and awaiting for a buying opportunity, another big buying opportunity? So, I mean, that's pretty much the recap today. I mean, other than the big Netflix earnings, Morgan Stanley had great earnings. So, I mean, the markets were up. pretty much all day. There was a little dip in the Russell, but it closed up higher. But the Nasdaq, the Dow, and the S&P were up all day, and they remained up. And currently, right now, as I'm filming this, the futures markets is kind of flat. So, but tomorrow, what we have to look forward to, we have the jobless claims number, and then we have some other economic data. The jobless numbers tomorrow, they're projecting another 900,000 plus people to file for initial jobless claims. Again, that's an insane number. Just saying it out loud, I don't think people understand the magnitude. If this was any other time in history, people would be jumping out of a window. So, but again, the worse the economic data gets, the higher the market's going to go, because they know the government's going to have to do more to stimulate it, and most of those stimulus dollars are going to wind up back in the stock market, directly or indirectly. You know, if you put money in consumers' hands, what are they going to do? Order stuff on Amazon, go to their Apple store, things like that. So the money is going to find its way back into the stock market. So the stocks look poised for, you know, a good 2021, barring any unforeseen disasters, which in financial markets, disaster is always around the corner. But like I said, just control your risk and yeah, stay invested, pretty much. But yeah, don't forget to like and subscribe, and I'll do a recap of tomorrow's news and talk more about the economic data and basically the outlook of the markets moving forward. Thanks.